And gentlemen, hope your Easter is good. My name is Dr. Robert Mugo. I want us to discuss about financial literacy simplified. Today, I want us to continue with the series on taxation, and my interest today is particularly on which is better, tax exemption or zero rating. Tax exemption, we mentioned that here goods do not have, there is no VAT, simple words. And then zero rated means that there is VAT, but at 0%. If you quickly recall, we talked about input tax and output tax. Goods input tax is tax on things that you bring to your business. So this is VAT on purchases. Output tax is VAT on sales. Items that are zero rated will claim VAT on the bringing them to the business, but you will not charge any VAT. Items that are zero rate exempt, you will not charge VAT, but you will not claim any VAT on bringing them to the business. In the VAT model, we basically what we do, we normally take the output tax, you less input tax. The difference is either two things: tax payable, that is, let me say VAT payable to the government, or that is if it is positive, or refund if it is negative. Most of the times, goods that are zero rated will have zero output tax. You will not give anything to the government, but input tax you will claim. Let's say if you claim 500, it means that you will go, when you are filing by 20th, you will claim 500 from the government. I want us to give, there is a time, I think politicians were suggesting, there were some budget proposal that most of the goods, basic goods, should move from being VAT, zero rated to being VAT exempt. And they would argue, as politicians in Kenya, they would say, you see, all of them tax is zero. The effect is not the same. And I will demonstrate here by a household good. Maybe I can use milk or flour. Let's take, for example, maize flour. Let me use milk. Milk is my favorite. Milk, you have sales worth 5,000 before tax, before VAT. How did you arrive at these sales? There was some packaging worth, let's say, 2,000, or let me use a figure, a smaller figure, 1,000. There was transport, that is hiring. You hired a vehicle worth 2,000. Then there was advertisement worth 1,200. This comes to a total of 4,200. 200. If this milk is zero rated as it is, the output tax will be 0% of 5,000, which is. Then the input tax, I'm assuming these items, packaging, hiring of transport and advertisement, these are taxed at the standard rates. It will be 16% of 4,200. How much is that? If I say 16% of 4,200, that gives me 672. So when you are filing, you will have output tax 0, input tax 672. The difference is 672, and I said if the difference is negative, we have VAT refundable. Assuming this person did not have any other business, they would claim 672 from the government, or it would be carried forward to the next period. Now, if this milk, as there were suggestions, was zero rated, so it was tax exempt, it would mean the output tax would be 0. Then the input tax, remember I've said if anything is tax exempt, you don't claim any input tax. So input tax would also be 0. So the tax, the VAT tax refund or payable would be how much? 0. Now, which is better? You are filing VAT, getting a refund or pay 0, option 1. The other option, you are getting from the government 672. Remember, we said that if an item is VAT exempt, you will not even be registered. If that is the only business that you do, you only deal with VAT exempt items, you will not even need to register. But for a business that is dealing with VATable, tax exempt, standard goods, zero rated goods, you can see clearly for yourself that it is better to have what? VAT that is zero rated than tax exempt. Wish you well.